What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about TMF, and that is going to be our tactical trade that I took back in 2023 that worked out really well. A lot of people have been asking questions on whether this trade is back on, given how much the 10-year treasuries, the 20-year treasuries, the yields in general have started to move back higher, and we're back over 4.3% on the 10-year treasury yield. So I'm going to answer that question. I'm also going to break down the Congressional Budget Office's CBO's forecast for the deficits for 2024 and going into 2025, because that's going to give us a little bit of an idea on what's on the pipeline with respect to these issuances, because at the end of the day, the bond market is significantly bigger than the equity market. And a lot of the issuances that the government does, the US government, when they issue bonds, the buyers of those bonds are basically buying and lending money to the US government. And as a result, those demand and supply factors were what really dictates the price and the yield. Because as prices go up, yields come down. There's that inverse relationship between price and yields when it comes to the bond market. And if there's a lot of demand, right, we know what happens to the price. There's going to be higher and higher bids for the same instrument. And as prices come in strong, yields will start dropping back down, and vice versa. So I'm going to break all that down. As always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. There is a few more spots open and available for the month of February. There is a 16% annual discount that's also available until the end of this month. So link's going to be down below. And again, would love to have you on board over there as well. So this right here is from December 8th. I exited my entire position on TMF, sent out the alert out with the rest of the position as yields bounce back higher, plus 20% profit. I'll re-enter if the yields once again hit 4.5%. And this right here was, again, a few days later. 10-year yields just broke down below 4%. TMF up another 2.7% to almost $63. Even though I'm not holding TMF at the moment, I'm cheering for all of you. The trade finally playing out as expected. Super happy and excited to see TMF finally rocketing higher. Congrats, and share your gains in the profit channels as well, because the yields were really dropping aggressively. And as you can see, they were under 3.9.5% at the time of this screenshot. And this sent out this alert as well. Now, this right here is the budget outlook by fiscal year 2023, 2024, and 2033, right? So that's going to be billions of dollars. And we're going to come back to this. I really do want to go over the yields first. So as you can see, that we're back over 4.3%. So it's obviously been pushing higher since lows of 3.8%. The yields have rallied a little bit over 13%. And as a result, both TLT and TMF have continued to sell off. So from highs of well over $67, TMF is down 24%. From my exit from back in December, TMF is down a little bit over 15.5%. I exited somewhere in the low 60s. It rallied all the way up to $67, $68 per share. So obviously I did not catch the entire move, and that's normal, right? You're not going to pick the bottom and pick the top. You're going to find somewhere around the ranges of those tops and bottoms. And TLT are obviously dropping after hitting that lower high. It's down about 8.3%. So the bond market has actually underperformed on a year-to-date basis. So TLT is actually down year-to-date. It's down almost 6% as the equity markets continue to plug along and drifting higher and higher. So S&P is actually hitting new all-time highs. It's up 3 to 4% year-to-date, and the bond market's still struggling. It is actually starting off on the wrong foot, down almost 6% year-to-date. Now, this right here is the overall downtrending channel that we have discussed for TLT in the past. Now, this is quite irrelevant in my opinion. What's a much better analysis piece is going to be the 20-year and the 10-year treasuries, because at the end of the day, that's really what's going to dictate where the prices go. And you'll notice that right now, the 20-year is also back over 4.6. I mean, we were, back in December, we were at 4%. And from those levels, it's already rallied over 12.6. So if you come over to the CBO, Congressional Budget Office, in terms of how much issuance there is going to be, this right here is the overall revenues, right? So $4.8 trillion is what the US government, fiscal policy, right? That's part of the Treasury Department. They're expecting revenues of $4.8 trillion, of which $2.4 trillion are going to be individual income taxes. So income taxes that people in the US file. And then $1.6 trillion is going to be payroll taxes. Corporate taxes account for about $479 billion. So that's crazy. Only $500 billion in corporate taxes. And this right here is going to be outlays, right? Outlays meaning expenses, things that they're investing in. Of course, Social Security is going to be part of it. Defense is going to be part of it. we've got major healthcare programs, Medicare, Medicaid, a lot of those discretionary items. So defense and non-defense budgets are also going to be part of it. So the total discretionary spending is going to be $1.8 trillion, and net interest alone is going to be $739 billion, right? So off the $1.6 trillion deficit, 739 billion alone is coming from interest expense, right? Interest on the existing debt is making up more than 50% of the deficit itself. So that is what's the mind-boggling part, and that's exactly why Jerome Powell also mentioned in the 60-minute interview that the US is obviously on an unsustainable fiscal path because they're spending more money than they're bringing in, and that's pretty obvious, right? Every single year they've been spending more money, meaning they're investing more on defense and education and healthcare and discretionary spending, $6.5 trillion of outlays with $4.8 trillion of revenue, of income. Now, this obviously fluctuates depending on individual taxes and income taxes and payroll and capital gains and whatnot. But again, this is pretty much budgeted. This is still sort of vulnerable to some type of volatility, some type of variability, so to speak. So $1.6 trillion, that's the number that we're working with. And if that's the amount of supply that's going to be hitting the market, because at the end of the day, the Federal Reserve has to, not the Federal Reserve, but the fiscal department has to finance the deficit somehow, right? That $1.6 trillion needs to be accounted for, meaning that they need to borrow in order to keep up with this deficit, right? It's very simple. They need to borrow money to account for this deficit. And $1.6 trillion is a little bit higher than the 2023 number. And when we did have a lot of supply of $1.4 trillion coming to market and the demand not being so strong, well, we already know what happened with yields. I mean, 2023, up until October, the yields continued to skyrocket higher, right? They hit highs of 5.3, 5.4%. That was for the 20-year treasuries, and for the 10-year treasuries, also, I think, hitting highs of almost 5%, getting up to that level of over 5.021%, right? So getting up to that level on the back of such significant issuance. So if in 2024, the deficit is going to be 1.6 trillion, and this number is indeed, let's say, correct, and we're going to see a lot of bond issuance from the U.S. Fiscal Department, the Treasury Department, well, guess what? That's, once again, a lot of supply hitting the market, and we just need to be patient enough to dollar cost average and start to looking into this TMF and TLT trade a little bit more tactically once again. So what I would personally be doing is I'll keep a close eye on a lot of these bond auctions that are going to be happening over the next several quarters and take a look at where the yields are going. Right now, they're obviously on the way up. Yesterday, the yields were up a little bit over 3%. The markets did have, pretty decent sell-off. And if you do continue to move higher, let's say to back up to 4.4, 4.5, 4.7, 4.8 to as much as 5%, then yes, in my opinion, the TLT and TMF trades are going to be back on from a long perspective, because we also do believe and know that interest rates are eventually going to get cut. The Federal Reserve is very much focused on cutting interest rates sometime this year, towards the middle of this year, or towards the third and fourth quarter of this year. They're going to start looking at cutting interest rates on the back of continued stronger inflation prints, so they need that greater confidence, and at the same time, if the economy continues to be good. Now, what could expedite this entire process of cutting interest rates? If inflation comes down faster, or a bigger sort of incentive for the Fed is going to be if the economy starts to weaken or unemployment starts to go up. If that happens, then the interest rate expectations, the cuts, are going to be expedited a little bit further. And instead of seeing a June cut, we could see a May cut. And of course, the amount of rate cuts could also increase in 2024. But nonetheless, keeping a close eye on this. For me personally, TLT TMF is not a trade at the moment, but it's potentially setting up to be one towards the later halves of 2024. So I will keep everyone updated. I'll send out the alerts on Discord, but keep a close eye on the 10-year treasuries. If it gets up to 4.5 to 4.7, 4.8%, then I'll be looking at TMF once again very, very closely in the 40s, in the mid 40 range once again. So hope you all enjoy this video. Let me know your thoughts down in the comment section below. As always, make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course, getting access to all the members only private videos. There is a 16% annual discount that's available until the end of this month. So always happy investing. I'll see you all in the next video.